March 2025 began with a seismic shift in global trade. The world was taken aback as a new wave of protectionist policies emerged, threatening the delicate balance of international commerce. Former President Trump, known for his unpredictable policy moves, announced a 25% tariff on imports from Mexico and Canada. This bold move was part of his broader strategy to reshape America's trade relationships. This decision sent shockwaves through the global market. Investors and traders around the world reacted with immediate concern, leading to a significant drop in stock prices and increased market volatility. Trump cited the flow of fentanyl into the U.S. as justification for this drastic action. He argued that the tariffs were necessary to combat the ongoing opioid crisis, which had devastated communities across the nation. He also doubled tariffs on Chinese imports to 20%. This escalation was seen as a direct challenge to China's growing economic influence and a bid to protect American industries from unfair competition. This move was widely seen as an attempt to pressure these countries into trade concessions. The administration hoped that the tariffs would force Mexico, Canada, and China to renegotiate trade deals more favorable to the U.S. The tariffs were met with immediate condemnation from businesses and economists alike. Critics argued that the tariffs would hurt American consumers and businesses by raising prices and disrupting supply chains. Many feared a trade war. The prospect of escalating retaliatory measures loomed large, with potential consequences for the global economy. This fear was not unfounded. The initial market reactions were just the beginning, as businesses braced for long-term impacts on their operations and profitability. Canada and China wasted no time in announcing retaliatory tariffs on U.S. goods. These countermeasures targeted key American industries, further escalating the trade tensions. The world watched nervously as the trade dispute threatened to spiral out of control. The stakes were high, and the potential for a full-blown trade war seemed increasingly likely, leaving global markets on edge. The retaliatory tariffs from Canada and China targeted key U.S. industries. American farmers, already struggling with low commodity prices, found themselves in the crosshairs. The price of soybeans, a major U.S. export to China, plummeted. Canadian tariffs targeted American whiskey, maple syrup, and other products. This tit-for-tat exchange of tariffs created uncertainty in the global market. The economic pressure on the U.S. was mounting. The trade deficit, already at a record high, ballooned further. The stock market, which had been enjoying a period of sustained growth, began to show signs of strain. The S&P 500, a key indicator of market health, fell by almost 2%. Investors were clearly worried about the impact of the trade war on corporate profit. In a surprising turn of events, Trump announced a one-month exemption on auto tariffs for Mexico and Canada. This decision came after intense lobbying from major automakers including Ford, GM, and Stellantis. These companies argued that the tariffs would disrupt their supply chains and lead to job losses. The Trump administration also delayed tariffs on all USMCA-covered products from Mexico and Canada until April 2nd. This delay came after talks with Mexican President Sheinbaum and Canadian officials. Exemptions included TVs, air conditioners, avocados, and beef. Tariffs on potash were reduced from 25% to 10%. However, a significant portion of U.S. imports from these countries still faced the prospect of tariffs. Despite the exemptions and delays, the trade war was far from over. Trump, in another unpredictable move, threatened new tariffs on Canadian lumber and dairy products. He accused Canada of unfair trade practices, reigniting tensions between the two countries. The phone call between Trump and Canadian Prime Minister Trudeau was reportedly heated. The Canadian Prime Minister stood firm, refusing to back down in the face of American pressure. The trade dispute, far from being resolved, seemed to be entering a new, more dangerous phase. The escalating trade war sent shockwaves through the global financial system. The US dollar, the world's reserve currency, experienced a sharp decline in value. Investors, fearing a full-blown trade war, sought refuge in safer assets, such as the Japanese yen and the Swiss franc. The dollar's decline had far-reaching consequences. American consumers faced higher prices for imported goods, from electronics to clothing. American companies with operations overseas saw their profits eroded by the weaker dollar. The trade war, initially conceived as a way to boost the American economy, was having the opposite effect. Section 6. Economic and political fallout. A nation divided. The economic and political fallout from the trade war was significant. The stock market experienced sharp declines, reflecting investor anxiety and uncertainty. Headlines were dominated by news of economic downturns, and store shelves began to empty as supply chains were disrupted. Businesses facing uncertainty and volatile prices put investment decisions on hold. Many factories closed their doors, leading to a rise in unemployment. Office spaces remained empty as companies hesitated to expand or hire new employees. Business meetings and deals were frequently cancelled, stalling economic growth. Consumers worried about the future cut back on spending. Malls and shopping centres saw fewer visitors and consumer confidence plummeted. Charts showed a significant reduction in spending, reflecting the public's fear and uncertainty about the economic future. The trade war, far from being a quick and painless victory, was dragging on, hurting both the US economy and its reputation on the world stage. International news outlets covered the escalating tensions, and damaged shipping containers symbolized the disrupted global trade. The prolonged conflict had far-reaching consequences, affecting economies worldwide. The trade war also deepened political divisions within the US. Political rallies became more frequent and more heated, with citizens expressing strong and often opposing views. Congress was divided, with intense debates and little consensus on how to move forward. Democrats criticized Trump's handling of the situation, calling the tariffs reckless and harmful. They argued that the tariffs were hurting American workers and consumers more than they were helping. Anti-tariff protests gained momentum, with people taking to the streets to voice their discontent. Republicans, while generally supportive of Trump, expressed concerns about the impact of the trade war on American businesses and consumers. Small businesses, in particular, were struggling to cope with the increased costs and uncertainty. Bipartisan debates highlighted the complexity and the far-reaching impact of the trade policies. The trade war, initially conceived as a foreign policy issue, had become a deeply divisive domestic political issue. Political analysts discussed the ramifications, noting how the trade policies had split Congress and the nation. The debates on trade policies were no longer just about economics. They had become a battleground for broader political ideologies and visions for the country's future. Section 7. Beyond tariffs, a tumultuous month in American politics. March 2025 was a tumultuous month in American politics, even beyond the trade war. The Trump administration announced deep staffing cuts and reorganization across federal agencies, including the Social Security Administration. These cuts raised concerns about potential disruptions in essential government services. The National Fire Academy cancelled classes due to funding freezes and staffing cuts. This decision raised concerns about the country's preparedness for natural disasters. Changes in immigration policy led to legal challenges and decreased school attendance in Denver due to fear among families. The Trump administration's actions, both on the trade front and domestically, were having a profound impact on American society. Section 8. The Musk Factor: Efficiency or Chaos? Elon Musk, the billionaire entrepreneur, emerged as a central figure in the Trump administration's push for government efficiency. As head of the Department of Government Efficiency, Musk spearheaded cost-cutting measures across various federal agencies. While some praised his efforts to streamline government operations, others criticized his methods as being too disruptive and lacking transparency. Musk's cost-cutting measures faced legal challenges and became a target in the Democratic ads. His role in the Trump administration highlighted the growing influence of tech entrepreneurs in American politics and the potential conflicts of interest. The trade war initiated by the Trump administration's tariffs on Canada and Mexico had far-reaching consequences. These tariffs, aimed at protecting American industries, instead triggered a series of retaliatory measures from affected countries. It destabilized global markets, strained relations with key allies, and deepened political divisions within the US. The uncertainty created by these policies led to volatility in stock markets, affecting not just large corporations but also small businesses and individual investors. While the full impact of these policies is still unfolding, one thing is clear. The tariff gamble came with a hefty price tag. Industries that relied on international supply chains faced disruptions, leading to factory shutdowns and worker layoffs. The trade war serves as a cautionary tale about the unintended consequences of protectionist policies. Consumers felt the pinch as prices for everyday goods rose and businesses struggled to adapt to the new economic landscape. It underscores the interconnectedness of the global economy and the importance of international cooperation in navigating complex economic challenges. The tariffs highlighted how actions in one part of the world can ripple through the global economy, affecting everyone.